for this video, we're going to talk about insurance and the different types of insurance. We're going to start with auto insurance. If you were not in a car crash, feel free to skip forward a couple minutes because this one's going to take a couple minutes, and yours is going to be more about liability, which is what we're going to be talking about when it comes to the auto insurance, but it's just a little bit different. So just warning you, if you were not in a car crash, if your injuries were from something else, feel free to skip ahead a couple minutes. But let's talk first about liability insurance. I'm not talking about liability only on your auto policy. What I am talking about is the other driver that hit you, their liability insurance. Their insurance is the insurance that's going to cover you for your injuries, and it's separate from the property damage. There is property damage insurance. I'm going to specifically focus on insurance for the injuries. You have the other driver's insurance, and usually the increments are 25, 50, 100, 300, 500, or $1 million. That's usually what it is. Those are usually the amounts. And we don't know right away. We don't usually know until they tell us. And sometimes we have to file a lawsuit to get that information. We're not automatically entitled to that information. So that's the first part of insurance. The next types of auto insurance that I want to talk about are uninsured motorist coverage, underinsured motorist coverage, and MedPay. All right. And these are your insurance. And if someone else is at fault, it's not going to increase your rates for being in the crash. Even if you use these, it's not going to increase your rates. And we get that question quite a bit. It should not concern you. You do pay for insurance for a reason. This is one of the benefits, but because you were not at fault, it should not increase your rates. All right. And if for some reason it did, let us know. We can put you in touch with several insurance agents that can help you out and give you a better insurance for a lower amount. But when it comes to these three different additional types of insurance, I'm going to talk about uninsured motorist coverage first. That's whenever the other driver did not have insurance, so they caused the crash and did not have insurance. And this is to protect you in that situation, and it would go through your insurance, and the limit depends on whatever policy you paid for. All right. And in many situations, if you have multiple vehicles, we can stack those coverages, meaning that we can add them on top of each other. It depends on your policy. We'd have to look at it, but that's also an added benefit where you may have way better coverage than what that other driver would have if they did have insurance. The next type of insurance I want to talk about is underinsured motorist coverage. That is where the other driver did have insurance, but it didn't cover all of your damages. Now, this is a tricky one because some policies have what's called a set-off, or you might hear offset. Set-off, offset, they're the same thing. And hopefully that's not what you have. If you do, you need to cancel your coverage and go with someone else, go with another insurance company. But I'll give you two situations where one is the other driver had $25,000 in coverage and you had $50,000 in coverage. What they would do is they would take your coverage, they would subtract what you already paid by the other driver's insurance, and that's what you have left over. So in that situation, you'd have $25,000 left in coverage for your injuries. I'm not a huge fan of set-offs. It sort of frustrates me. So I've got several videos about that, but it's a frustrating thing because you'll never get the full benefit of that $50,000. Let me give you a worse situation. Other driver has $50,000 in coverage. You have $50,000 in coverage, which means you get $0 for your underinsured motorist coverage. Very frustrating. But if you don't have an offset, what you'd have, let's use both those situations. If it was a $25,000 policy and you had $50,000, you'd have a total of $75,000. If the other driver had 50 and you had 50, you'd have a total of $100,000, which is a significant difference, right? That's a significant difference, especially in the 50 and the 50, because you go from $50,000 in coverage up to $100,000 in coverage, as opposed to $50,000. That's all you get. And that's in a situation, though, where you're injured seriously enough where the other driver's insurance will not cover your damages. Okay, so just because you have the insurance coverage does not mean it automatically applies. Your damages have to be severe enough. And then the third part I want to talk about is MedPay, all right, medical payments coverage. You might also hear PIP coverage. You might hear that in some states, where what that means is that's payment for your medical bills. That's all it means. And in some states you can double dip, meaning that you can get paid by the other driver's insurance and the MedPay. But in some states, like Illinois, they actually can subrogate, meaning they can get that money back. And if you have in Illinois, you might as well just cancel it because it can be pointless unless you were at fault for the crash, and then it wouldn't be pointless. But for the most part, it's fairly garbage insurance in states where they do have that subrogation interest. Now let's move on to other types of liability coverages, and this is where we're talking about when it comes to slip and falls, dog bites, even medical malpractice. That's where there is the liability coverage, whatever it may be. It's similar to what you'd see in a car crash, but the at-fault party has insurance to cover the injuries. And just because you were injured by a business does not automatically mean that they have insurance. And same thing when it comes to governmental entities. Many times they are what's called self-insured, meaning that they'll pay it out of their own pocket. Hy-Vee, Schnucks, companies like that, they've got self-insured policies. Deerbergs, they're self-insured, and they've got a pool of money. They don't have insurance, they have a pool of money that they pull that money from. And that's what you'll see in those situations. And then the next type of insurance I want to talk about is umbrella coverage. And umbrella coverage applies to individuals where, let's say, usually they're owned by wealthy individuals. Let's say that person it could be, you fell at their house, or you were in a car crash with them and they're at fault. They didn't have enough insurance to cover all your injuries, and then their umbrella policy would kick in to pay for your medical injuries. And that's an additional coverage that can sometimes be difficult to track down, but we do our best, and if we have to file a lawsuit, sometimes we have to do that to get that information. The last types of insurance I want to talk about are health insurance, and that could be Medicare, it could be Medicaid, and it could be private insurance. That is an additional coverage, obviously, that we're dealing with when it comes to a case. And if you have private health insurance, Medicare or Medicaid, we may have to pay medical bills back if you did run any of that through your health insurance, any of your medical treatment through your health insurance. Keep that in mind, where when I was talking about earlier in another video about liens, it may be in your best interest, again, because of this, because you're still going to have to pay some of those medical bills back in most situations. And that's why it's usually in your best interest to put a lien on your case. Increases the value of your case, and then also you're going to have to pay it back no matter what, so you might as well get the benefit of it. So, hopefully this information helped you out. If you have any questions, obviously reach out to us.